Okay, great. Welcome everybody. My name is Lisa Mutch. I'm Communications and Capacity Building Director for the Ohio CDC Association. I want to thank Cassandra Larcarte of Federal Home Loan Bank Cincinnati for being so adventurous to help us test Zoom for this session. We're very excited to be holding our annual conference this October 13th through 16th via Zoom. We're going to use Zoom quite a lot. It will feature our keynotes, Chef Marcus Samuelson and Mirsa Baradaran as keynote speakers. And we really, while we're using Zoom, we really want to focus on getting you out in breakout rooms, having small group discussions. So we're really excited. We know people have some screen fatigue, so we're working to make it really engaging. And I'm really grateful for Cassandra for letting us experiment with that. So when she first reached out to me, she had mentioned that Federal Home Loan Bank resources are underutilized in Ohio, and that surprised me, this is a major reason that we wanted to do this session today, so you all can learn more about Federal Home Loan Bank and the resources that they have and get connected to them. So I think it's about time to kick it over to Cassandra. Please remember to send me questions as you have them. I'm labeled questions in the chat. But let's get started. Cassandra?
Thank you, Lisa. Can everyone hear me well? Yeah, thanks, Damon. Good morning, and like I said, my name is Cassandra Larcarte, and I'm Assistant Manager for Compliance and Outreach with the Federal Home Loan Bank. I'm so excited to be sharing with you a little about our bank and the products that are available for use through our Housing and Community Investment Department. This will be a relatively short presentation, but informal. So as Lisa talked about, please throughout the presentation, send any questions that you may have, and I'll try to answer them as we're going along. But we will have an opportunity at the end of the presentation to answer questions as well. So let's just get started. First, I'm just going to tell you a little bit about the Federal Home Loan Bank. FHLB Cincinnati is one of 11 wholesale banks originally chartered by Congress in 1932. And although we offer similar programs, each one of our banks operates independently. But many of the programs and activities of the bank are federally regulated, so they are available at other banks. And even though we're federally regulated, we are actually not a government agency. A lot of people get those things confused for us. We are privately owned by our member financial institutions, and who are also our customers, making FHLB in essence a cooperative. All members of the Federal Home Loan Bank Cincinnati have charters in Ohio, Kentucky, or Tennessee, which is considered our district, which is the 5th district. And despite membership being restricted to these 3 states, our products are available to all our members wherever they do business. So this means that a bank in Ohio can utilize a grant or a loan for some of our programs for housing projects in maybe Texas or Louisiana. The members themselves represent commercial banks, savings institutions, credit unions, and a growing number of CDFIs and insurance companies. So now let's get more information about our particular department, which is the Housing and Community Investment Department as part of the Federal Home Loan Bank of Cincinnati. The goal or mission of HCI department at our bank is to support our members' community investment efforts through investment of funds in sustainable, affordable housing and economic development activities benefiting low-income households across our district, which I said is Ohio, Kentucky, and Tennessee. We do this through the programs that you see here on the screen, and I'll be briefly going over all of them, but more details on all of our programs can be found on our website at www.fhlbcin.com under Housing Programs. And if you hear anything today that sounds just particularly interesting, we would be happy to have a one-on-one session with you and come and talk to you about our programs. Well, not come and talk to you via Zoom, WebEx, you know, the new COVID world of getting to know somebody. The program that we are most known for and the one that you probably use more often is the Affordable Housing Program. The Affordable Housing Program, or AHP, provides grants to help construct or rehab ownership and rental housing for households that fall below 80% area median income for the county using HUD or MTSP. A project can have households that exceed 80% AMI, but AHP funds just cannot pay for those households. AHP awards grants up to $1 million or 75% of the total project costs, whichever is less. Last round, we funded probably more $1 million projects than I had ever really seen since I've been here at the bank. But I've also seen us do grants for as low as $40,000. So the requested amount can be have a really wide range, and so anyone can actually apply. AHP has a competitive application. Projects are evaluated to determine if they meet certain eligibility and threshold requirements, whether they are financially feasible, and of course, if they score well. It is a 100-point scoring system that attempts to make it possible for both owner and rental projects to score well and be funded. As I stated, we are privately owned. So the subsidies are provided through our AHP and another program that we'll talk about a little bit later, our Welcome Home program, are a portion of the net earnings from our members. 10% of the net earnings pie goes towards these programs. And we have been able to continuously offer these programs for about 30 years, even during economic downfall. So that's really great for our Federal Home Loan Bank of Cincinnati. So how can AH funds be used? AHP can be used in association with the ownership or rental housing development. AHP can only be used to pay for costs directly related to the housing development, such as those with the purchase of the land or building, rehabilitation, or new construction hard costs, are the soft costs associated with the development of the project. Profit and nonprofits organizations are eligible to participate in this program, although there is a slight point advantage if you are a nonprofit as the primary sponsor.
Cassandra, we have a question actually.
Yeah.
What is the typical score needed to be competitive with AHP?
Okay, so that varies from year to year. There is no typical score. The last year was actually pretty high. I think the last score was about 65 and the high was about 78. And I remember in 2016 and 2015, we had scores down in the 50s. So there is no real competitive score, I would say, if you're, but I've never seen a 40 being awarded. I will say that though. And so you want to make sure that you're at least in the 60s. Is that it? Okay. So AHP represents a gap funding source, meaning that it only covers the difference between the total cost to develop a project and the other funding sources identified for the project. And as I mentioned, AHP cannot constitute more than 75% of a project's total funding sources. So for instance, if your organization has raised 60% of the funds needed to complete a project through maybe a capital campaign, or receive commitments from other grant funders for another 10%, and will be able to maybe have a permanent loan or something else, then AHP would fill that remaining 10%. This makes the project more affordable by lowering the amount you'd otherwise have to borrow or pay back in some other way. This also reduces the member's credit risk and thus may allow the member to charge a lower rate on the loan to the project. Please note that in most cases, FHLB requires that its members make the first mortgage to the project, but you can consult with FHLB prior to applying for AHP to see if maybe your project will meet one of our exceptions. The diagram here with these nice little people shows how a sponsor would go about receiving AHP funds. Like all HCI programs, no funds are directly provided to a sponsor, owner, or home buyer. Everything flows through the member. But with AHP, the process begins with the housing provider or the sponsor. First, the sponsor envisions the project and engages one of our members to collaborate with them. The sponsor creates the AHP application in our OASIS system, which the member then reviews and then submits to our bank. FHLB evaluates the application and makes decisions regarding funding awards. Assuming the project receives an award, these funds or subsidy will be stored at our bank until the project has completed construction or rehab. AHP funds after completion. There is an exception for rental projects. Some rental projects may qualify to receive up to 25% of their AHP award as part of an early disbursement. All those criteria are on our website. I'm not going to get into details right now, but if you have a question, just let me know. When the sponsor and member complete and submit a request for funds, we review and approve the request. The subsidy is then deposited in the member's DDA or demand deposit account here at the bank, and then the member must withdraw the subsidy from their account and credit it to the project sponsor in whichever way that you all decided to do that. Just a little note, this year AHP application opened on June 1st and closed on July 31st. And I know there are several people on the call today that have applications in with us and are excited to want to know when they will be announced. Announcements are November 19th. That is the day that you will know, and you can give us a call or give us an email, usually after our board meeting, to see if your project was funded. But letters will also be given out shortly, and we state the information on our website shortly after as well. Any questions on AHP before I move on to some of our other programs?
There's one more question that's come up, but please send them in via the chat. Do you know the percentage of applications that are generally funded in an application round?
Ooh, good question. I don't know the exact percentage, but I'll give you a couple examples. Last year we had about 113 projects that were applied, and we funded, I believe, 50 something. The year before we had 103 projects come in, and we funded about 60. So it's, what is that? I'm not that good at math. I know I work for a bank, but I'm not that good at math to know that percentage, but that's just some of the, a couple of examples. So it really all depends on how much money that is available as part of that 10% that I talked about a little bit earlier. The number of, so a couple of factors, the number of projects that are approved that have higher funding requests. So like last year we had about, oh gosh, maybe 15 projects that requested $1 million, about 12 were awarded. So of course our funding went a little bit faster than it would have in other years. So those type things are the factors that go into play when we're deciding. Because you know, this particular program is the first come, it's all based on your scoring. So if those projects that are asking for a lot of money happen to score really high, then that funding depletes a little bit faster. Does that answer your question?
I'm hopeful it does. There is another question on, is there a cap on the subsidy per unit?
Depending on your project type. So if you are a regular rental project, the cap is $200,000 per unit. For the total project cost, $50,000 of AHP subsidy. If you're a shelter or group home, then that AHP subsidy is $15,000 per unit. Any other questions? Thank you. I appreciate you asking questions as we're going along. Okay. So if AHP is the most familiar program, Welcome Home program is probably the most widely used by our members. Welcome Home is funded with that remaining portion of the 10% earnings that I talked about a little bit earlier. This is a grant, but it is not used for construction. It is used to help eligible home buyers purchase their home in the form of down payment assistance, closing the costs, or principal reduction. Home buyers look this program up, and realtors are very familiar with this program and give us a call about them all the time. Any member of the Federal Home Loan Bank can participate in Welcome Home. Like AHP and all of our programs, the application for Welcome Home is ultimately submitted by the members. Funds do not go directly to a home buyer, but the program is very home buyer driven. It is not unusual for home buyers to be the ones who reach out to one of our members regarding this grant. Then the member determines eligibility and submits a reservation to HCI for approval. And only after the home buyer has been approved by our bank and received an approval letter should a member close on this loan. Then the member will request funding using their member portal, and we will review the request and deposit funds in their DDA account upon approval. So this is basically a reimbursement. The member will upfront the money to the home buyer and then request the reimbursement. In 2020, Welcome Home allowed up to $7,500 in grant funds for qualifying military person and $5,000 for all others. The member bank can further limit that amount, the request for each home buyer. Some members would do this to stretch their funds and serve more households, as members are only allowed $200,000 annually. Funds for Welcome Home can only be used with fixed rate mortgages, adjustable rate mortgages, and underwritten as it's fully indexed or balloon rate or balloon mortgages. The member that submits the application must originate the loan. However, the loan can actually close in another lender's name. To qualify, home buyers must be at or below 80% of the MRB limits, not the HUD AMI limits for the county and household size. They must have an executed purchase contract and have at least $500 in the transaction of their own money. The grant is property and home buyer specific. So if for some reason the home buyer was approved with one home but ended up purchasing another, the approval letter and the grant is no longer valid and funds will not be dispersed. As I said, Welcome Home is for home purchase and not home repair. It cannot be combined with other FHLB grant programs. However, if you are working with a potential home buyer that does not qualify for maybe AHP through another source, this program is a great option to help make a home purchase more affordable. The program is opened in March for the last few years. We'll know the exact dates in January with our new IP. And they are first come, first served basis. And so they're available until they run out. If you're working with a home buyer that has been approved this year, the reservation expires in December 1st, which means that all requests should be submitted before that time so that we get your funding out the door. Questions about Welcome Home? Like I said, I'm going through this relatively quickly so that we can touch a little bit on all the programs that we offer. Okay. So the next two programs that I'll be looking at are often lumped together under one umbrella called Community Investment Cash Advances, or CICA. And if you're looking for information on them on our website, that's where they'll be found. They'll be found under CICA. However, CICA represents discounted advances or loans offered through the Community Investment Program, one program, and the Economic Development Program. Under the Community Investment Program, discounted loans are available to finance the purchase, construction, and/or rehabilitation of housing and economic development projects. It is a loan to the member and not a grant. Members have the option of marking up the loan to their customer if they want, but they don't have to. and members are eligible to receive $1 million annually, depending on their borrowing capacity. The final loan to the customer or sponsor can be a long-term lending or a construction loan. Eligible uses for CIP include loans for the purchase, construction, or rehab of housing, whether that is single family or manufactured housing, as long as it will benefit households at or below 115% AMI. I know these keep switching AMI and MRB for the county in which it is. If the loan will be used for economic development, the households must have incomes at or below 80% AMI. So an example of CIP in use with housing may be that a member was approved for a $650,000 CIP advance or loan that they turned into a 15-year balloon payment for their sponsor organization. These funds can be used to construct maybe a 50 multifamily rental unit for elderly households, where 40 of those 60 units had incomes at or below 50%. So that's how they are able to participate in that program and use this product to actually help their community. A member may submit an application for the program within 3 months of the transaction closing, and an application is not required prior to the closing. It can be submitted within that 3-month period. So like I said, the second part of that SECA umbrella is the Economic Development Program, or EDP. EDP provides discounted loans to promote economic development and job creation, retention, also in areas with qualifying income and demographic measures. EDP loans can finance commercial, industrial, and agricultural projects, as well as for small businesses, public facilities, even daycares, since a lot of projects do that, and infrastructure projects. The loans are priced daily at FHLB cost of funds plus 3 basis points. Rates can change daily, and the actual rate will depend, just like with CIP, on the term of the loan. So for example, a 1-year loan may be a rate of 0.2%, 0.26%, while a 15-year may be at 0.69%, slightly higher, but still very deeply discounted. A member can contact our credit department or ACI for this type of information if you are actually interested and get those rates on a daily basis. So eligible uses that I was talking about for EDP include commercial purchases, the agricultural infrastructure. The loan is quite flexible in its use. However, the project must benefit the community based on median incomes for the area, which is 115% AMI for rural areas and 100% for AMI for urban areas. This slide shows the process for both CIP and EDP. Members submit the application to ACI for approval. ACI does not actually provide the loan, just the approval letter. That letter is then submitted with your advance application to the credit department with the bank, who then provides the funds. The member will then pass those funds onto their ultimate customer, the sponsor or other organization. So that's all for this. This is a very brief overview of these 2 programs. The main idea I want you to remember is that these 2 programs can be combined with other HCI programs to make your project more affordable. We even award points in our AHP application for using some of our FHLB advanced products. So, it's a win-win, one for a sponsor and for members. So we would definitely want to look at some of these programs and take advantage of them.
Cassandra?
Yeah.
I think you've touched a little bit on it, but can you elaborate a bit more on the key differences in AHP and the CIP?
So one of the main differences is that AHP is a grant and CIP is a loan. The AHP is a competitive process. CIP just requires an application and approval. AHP has a lot of stipulations and is federally regulated in the terms of how much money will go out to each one, and is very sponsor driven in the way that you apply. And the CIP is applied through the member, but can be used for sponsor organizations. That's just a really quick. Does that make sense? Okay. But the biggest is that one is a loan and one is a grant, and the way that they can be used.
I think that's good. Thank you.
So I'm now going to talk about some of our programs that fall under our voluntary programs. These programs may not exist at all federal home loan banks, but they are programs that we feel that meet the needs and priorities of our district. So the first I'm going to talk about is the Zero Interest Fund. Zero Interest Fund, or ZIF, provides zero interest loans, get that word, zero interest loans, to promote housing and economic development in Ohio, Kentucky, and Tennessee. The loans are awarded up to $100,000 per project and can help fund the upfront infrastructure costs for housing, commercial, and industrial real estate related projects. This includes land acquisition, engineering fees, legal costs, market studies, etc. Most of those pre-development activities that you do for your rental projects or ownership projects. There is not a limit to the number of applications a member may submit in general. However, we can limit applications if, for example, funds are becoming low. A housing project can use ZIF for a pre-development or bridge loan and still use AHP funds for other costs in the project. ZIF loans, unlike CIP and EDP, cannot be marked up to the sponsor or the final customer. However, reasonable fees can be charged. So members apply for ZIF through the member portal and request funds in the same way. All zero interest fund transactions must be structured for repayment at the earlier of 24 months for economic development projects, or 18 months for housing projects, or at the closing of either construction or permanent loan. This loan, this is, like I say, a loan product, could be especially helpful for those upfront costs to your project that I talked about. And even more enticing is that it is a zero interest to loan. It is a simple application process and funding process. So I really hope that you can take advantage of this. We don't have a lot of projects that do, but it is so helpful that it will help you with all of those pre-development activities, and you can still apply and use AHP along with it. A very popular program that we offer under the volunteer is the Carol M. Peterson Housing Fund. Through the Carol M. Peterson Housing Fund, Cmphf, or even shorter CMP, the FHLB provides grants up to $7,500 per homeowner to fund accessibility and emergency repairs for income special needs and elderly homeowners. The fund is named in honor of the former FHLB executive who spearheaded our affordable housing and community investment initiatives for more than 2 decades, Carol Peterson. And she had a passion for helping the special needs population. So our board did a fund called CMP. The grant is only available to qualifying households in Kentucky, Ohio, and Tennessee. So any member can apply, but the housing that you're helping can only be within our 5th district. Applicants that you're applying for must have ownership in the single-family detached home or a manufactured home. These funds are awarded on a first-come, first-served basis and go very, very quickly. Usually the program opens and closes in a matter of hours. This year was the first year that I can recall where the program closed at the end of the business day and not 2 hours after opening. Nonprofit sponsors and members partner to apply for these funds. Only nonprofits with designations shown on this slide are eligible to apply. unlike AHP, where a nonprofit or a profit can apply. And all must be approved to participate. So if you're going to be a sponsor for CMP, you do need to contact the Federal Home Loan Bank and fill out a sponsor capacity form prior to the date that the application actually opens. Like all our programs, all members are eligible to participate. However, they are limited to 10% of the available funding. And although sponsors can only partner with one member, members may partner with one or more sponsors for this program. The available funding for this changes yearly. So it is one of those things that it is really going to depend on the other funds that we have. Okay. Some examples of how the Cmphf can be used are to repair code violations for a home or citations, immediate repairs to essential systems like your septic tank or HVAC or for roof replacement, adding grab bars in the bathrooms or other places and handrails, widening doors to make the home more I'm sorry, I just lost my thought process. Widening doors to make it more handicap accessible, or building ramps. These funds can be paired with other HCI products, and we do have a couple of sponsors that actually pairs it with AHP, but we must clearly see if you're going to pair it with another product that the repairs are for something different than what the AHP is being used for. Moving on to our next program, this is the Disaster Reconstruction Program. Disaster Reconstruction, or DRP funds, are available to households that were affected by natural disasters to help with purchasing, constructing, or repairing their primary residence. Grants of up to $20,000 are available to homeowners in declared disaster areas, and renters can qualify for $5,000 toward the purchase of a home. This means that if you have a rental project that is damaged or destroyed, some of your tenants may actually qualify for this grant if their goal is to have purchase a home. The disaster must be declared on a state or federal level, not a local level. And qualifying applicants must have a household income that is at or below 100% MRB limits. A potential home buyer or a renter can work directly with a member to apply for funds or through a sponsor. So it doesn't have to be something that goes through a sponsor organization. Ultimately, the member will submit the application, just like all things, and funds are reserved for a household with a specific property. Because the process of declaring disaster, assessing damage, determining next steps, believe me, I've been through all of that living through Hurricane Katrina, it's not a quick one. So applications for funds can be submitted within 24 months of the declared disaster. The funds can only be used for repairs that are not paid for by your insurance or other federal state funding. DRP can be used in conjunction with CIP, but not with AHP or with Welcome Home. Any questions?
We have a few questions kind of on a variety of subjects.
Okay.
I'll come in real quick. So first off, how would someone know when CMP is available?
So CMP will, I think CMP typically starts around the same time, and we send out announcements to all of our sponsors when our program is about to start. So if you are on our list of sponsors or have used any program that we have, you'll be on that list that we send out about when our program is starting. I believe it typically starts in April, but I can get back with you for the exact dates on that. But usually we send out an announcement when it's opening and when it's going to close.
Great, thank you. We also have a question about membership. your membership overview, is that to be addressed? Is that in your slides? Not, yeah.
I'm not quite sure how you, okay, so if members are the ones, institutions that I talked about a little bit before, there are CDFIs, what did I say? On all the other different type insurance companies, etc. And if you are not a member, you can talk to our member services department about how to become a member and what the qualifications for becoming a member in our system is. And like I said, you have to be chartered in Ohio to be a member of the Federal Home Loan Bank of Cincinnati. Anyone wanting that specific information for their bank can contact me later after this presentation, and I'll be happy to forward your information on to one of our member services people to see if your bank actually qualifies for this Federal Home Loan Bank.
Great. Are you, can you share a list of the members?
So all of our members are on our website. There is a member directory, and anyone can look up our members by either their zip code or the place of business that you're at. So if you're in Hamilton County, you can input Hamilton County and see those banks that are members in that area, or you can just look by a city or a state to see if your particular bank, what banks are in your area that are members. And if you have the specific name of the bank that you want to work with, you can input that information into the member directory and they'll let you know if they are part of the Federal Home Loan Bank of Cincinnati.
Great. And are there any tax benefits when operating these types of programs that are designed for low-income households? And they give an example, such as property taxes being waived or reduced.
Not directly from the Federal Home Loan Bank, but for some of our programs like the AHP, you can get points if your government will agree to waive some fees, but there's nothing from the Federal Home Loan Bank that directly gives tax benefits. You can get CRA points or for members though.
Is that with state or local government? Do you know?
Is that with state or local government? Oh, when you're looking for the points, that is local government mostly. Local government that you would be asking to waive points and, waive fees or taxes.
Great. And I do want to touch base. I'll save space a little bit for questions because they seem to be coming in kind of frequently right now. But there was one that was asked a while ago. And Damon jumped in on the chat, but I want to make sure everyone heard it.
Thank you, Damon.
About AHP schedule being in alignment with the LIHTC schedules, or if that's being in consideration. And just, he had written that because you operate in 3 different states and they have 3 different LIHTC schedules, it's impossible to do that. And I didn't know if you wanted to elaborate on that anyway, but I wanted to make sure everyone heard that and got the answer to that.
Okay, yeah. So as Damon said, we look at the QAPs and everything for each of our states, but because we are in 3 different states with QAPs and applications and award times and all across the board, it's really impossible to align with a certain tax credit agency. So we have like a middle ground. Some people, when they apply, that they've already applied for their tax credits, and then some that will be applying in the next few months of the next year.
Great.
Other questions?
This is being recorded, and all of this will be sent out to all of you also. So, but I think that's it for questions right now.
Okay. Okay, it is 10:42, so I'm gonna start going really quickly now. We're just on our last program, I think. Yeah. So the last program is actually that I'm going to talk about is a very, very new program, and it's called the RISE program. RISE was created in response to the needs of our members and the communities that they serve due to COVID. The RISE program offers up to $2 billion in 6-month advances at 0% interest to be used to support COVID-related assistance through 5th District, throughout 5th District, including loans originated by the member under coronavirus aid, CARES, as well as loans made to member customers impacted by the pandemic. Funding is still available and will be through September 30th. The program can be used to fund small business administration loans as prescribed under CARES, like I said, assisting mortgage services with required investors, or supplementing other delays in payments and facilitating other activities that all have to be COVID related. It's a very simple application process, and members can apply through the member portal on our website. So that is, just wanted to touch a little base on this program, since it is a short-term program, and I'm not sure at this time if it will be extended, but just wanted to touch base on it at least. So do you have any further questions? It's 10:44. I want to make sure that I'm cognizant of your time.
We had a clarification come in, and I checked it, that the Carroll and Peterson seemed to open up on June 1.
Oh, June 1st. Sorry about that. Great.
What is this year? Time,
yeah.
its own thing.
It is the year of the COVID. That's what it is.
Are there any questions popping up? Feel free to send them in the chat.
Okay. So I know that I presented a lot of information during our time here. I touched very, very briefly on all of our programs, but more details can be found on our website. And as I said before, if anything was of interest to you, please let us know. We would be happy to have come or speak with you about our program specifically. We do provide TA on a lot of our programs as well, so we'd be happy to do that. Just contact us. We are all working remotely, as I'm sure you all are too. So email or anything would be a great way to reach us. You can keep up to date with our latest news, events, and updates at FHLB by accessing the various social media sites are shown on this screen. And we always send out updates to the people that we have as sponsor if something's changing with one of our programs. For all of our program information, our AHP implementation plan is a great source in our website for all of our webinars. AHP implementation plan is revised and put out in January to show you where new dates and amounts and all those things for our programs will be for that upcoming year. If you're having an upcoming event, such as a virtual grand opening, we would love to be a part of that. Just give us a call or shoot us an email or in one of the facets here on the screen. And we would be happy to be a part of that. Overall, thank you for attending. And I really do hope that something resonated with you all and that you will be using and ready to use some of the Federal Home Loan Bank programs, not just AHP, but some of the other programs that we offer. And thank you again, Lisa, for inviting me and allowing me to share a little bit about the Federal Home Loan Bank. I hope you all have a great day.
Yes. Thank you, everyone. I will be sending this recording out to everyone and the slides sometime by the end of the week, along with a bunch of upcoming Ohio CDC opportunities. It seems that everyone is very happy with the presentation. Everyone's thanking you in the chat. I know you haven't had a chat. So thank you for leading this session, and please don't hesitate to reach out to Federal Home Loan Bank or Ohio CDC if you have any questions. Thank you, everyone.
Thank you.
Have a great day and stay safe.